Hello everyone, welcome to the Science of Accountancy. We shall discuss today about journal entry with the help of the golden rules. In this video, we can see how a journal entry is passed. So first, what is a journal? A journal is a primary book of accounting. Here we record all the business transactions chronologically in a systematic manner. And then finally these journal entries are posted into general ledgers. We shall make the journal entries in this content with the help of double entry system. Here we need to know that journal is a primary book of accounts. It is done with the help of double entry system and it is done chronologically. Now, you already have a clear understanding about the double entry system and the golden rules as we discussed in the previous video. However, we shall remind the golden rules once again before we start. So, as we can remember, there are three accounts according to the golden rules. The first account of the golden rules is personal account. It means those can be personified or under personal account like capital, drawings, debtors, creditors, etc. The rule is receiver is debit and giver is credit. The second account is real account. Anything which is your asset is under real account like cash, bank, furniture, car, etc. The rule is which comes in debit and which goes out credit. The last one is nominal account. Anything which defines expenses and losses or income and gain is under nominal account. The rule is expenses and losses debit and income and gain credit. Apart from this, we know that as per double entry system, every transaction will have a debit entry and an equal and consecutive credit entry. So this is the golden rules. Now we can pass journal entries. Before we start, here is a draft of journal entry. Please have a look into the same. First there will be a column for date, then particulars for the journal entry. Here we need to write the description of every entry beneath the journal entry, which is called narration. After that, there will be a column for reference number or voucher number. Then the amounts debit and credit respectively. Here you remind that the journal entry is parsed chronologically, that is date wise. Now, here is our first problem. On 1st April 2023, cash invested into business as capital, INR 1 lakh. Now we shall follow the 3-step method as discussed in the earlier video. The first step, read the transaction or problem carefully and understand the meaning. Here we can understand that an amount of INR 1 lakh has been invested into the business. Now the second step, find out at least 2 accounts in the transaction. Here we can see that cash has been invested, so cash can be the first account. And whenever there is any investment, it means it is capital. So capital account is the second one. Now the third step, follow golden rules. Cash is under real account and it is invested into the business. It means it is coming. So as per golden rules, cash will be debit. Capital is under personal account. Here capital is the giver, so it will be credit. Hence the entry will be cash account debit to capital account. Hooray! We have passed the first entry. Next, problem number 2. On 5th of April 2023, bank account opened with cash INR 50,000. First step, we have opened a bank account with cash. Step 2. We can easily find two accounts here. One is bank and the another is cash. Step 3. As per golden rules, bank and cash both are under real account. And the rule is which comes in debit and which goes out credit. Here we are opening a bank account. It means bank balance is increasing or bank is coming. So it will be debit. And for opening the bank account, we are depositing cash into bank. Hence, we can say cash is going. So cash will be credit. Thus, the entry will be bank account debit to cash account. Next problem. On 7th of April 2023, goods purchased from ABC Limited for INR 15,500 on credit. Step 1. We have purchased goods from ABC Limited for 15,500 on credit. It means no cash is engaged here. Step 2. We can find the first account is purchase and the second account is ABC Limited. It is our creditor. Remember, once there is a transaction on credit, it means we have to consider the debtor or creditor as an account. Step 3. As per golden rules, purchase is under nominal account. The rule is expenses and losses debit and income and gain credit. Purchase is always an expense, hence it will be debit. On the other hand, ABC Limited is our creditor and under personal account. The rule for personal account is receiver is debit and giver is credit. Here ABC Limited is giving us the goods. Thus ABC Limited is giver and it will be credit. The entry will be purchase account debit to ABC Limited account. Now there is an opposite problem. On 10th of April 2023, goods sold to KYC Limited for INR 25,500 on credit. Step 1. We sold goods for INR 25,500 to KYC Limited on credit. Step 2. We can find the first account is sales and the second account is KYC Limited. It is our debtor. Remember, as I told earlier, if there is a transaction on credit, it means we have to consider the debtor or creditor as an account. Step 3. We know that sales is under nominal account and the rule is expenses and losses debit and income and gain credit. Sales is always an income, hence it will be credit. Similarly, KYC Limited is our debtor and under personal account. The rule for personal account is receiver is debit and giver is credit. Here KYC Limited is receiving goods from us, so it will be debit. Thus the entry will be KYC Limited account debit to sales account. I think now you feel the subject interesting. Move to the next problem. On 15th of April 2023, electricity charges paid by check INR 1,500. Step 1. We have paid electricity charges INR 1,500 by check. Whenever check is mentioned, bank account comes into picture, as a check paid will cause decrease in bank balance and vice versa. It has no effect in cash balance. Step 2. Guess the accounts. First one is electricity charges and the second one is bank, as we have paid by check. Step 3. Electricity charges is under nominal account. The rule is expenses and losses are debit and income and gain are credit. We are paying electricity charges, so it is an expense. Hence, it will be debit. At the same time, bank is under real account. The rule is which comes in debit and which goes out credit. Here we are paying through bank, it means bank goes out, hence bank will be credit. The entry will be electricity charges account debit to bank account. Hope this video helps you to understand the journal entries in a better way. Please follow our next video for the rest part of the chapter. Don't forget to like and subscribe and click on the bell button too for more such videos. For any suggestion, you can comment in the below comment box. Thank you for watching.